Okay, so I think we're nearly ready to go. Uh, right, we're still waiting for a few just to join there, but I think we'll kick off just in the interest of time. So thanks everybody for joining us for another webinar. It's actually been a while, but hopefully you find this interesting. So the topic today is how your accountant's holding you back and what to do about it. Um, Hopefully quite topical in the sense, and maybe it's not always evident as to why a reactive accountant is perhaps not providing you with the support that you need. And kind of what we want to do today is try and explain kind of the hidden costs associated with an accountant that maybe isn't providing you with the level of service that you should have. So it's maybe going under the radar as to how much of an impact that's potentially having, and then maybe going through what kind of good looks like. So from that point of view, we'll kick off. Stephen, with the first slide. Ready?
Yeah.
Yeah. Okay. So myself and Stephen are from Toast, obviously. All right.
Well, I suppose we'll start with just a bit about us, and what we'll cover essentially through this webinar. But so Toast now is operational coming on 4 years, isn't it? Michael.
Yeah.
So I think we're coming
Yeah.
up in 4 years now, and we originally started, kind of a Toast kind of came about obviously with the advances in technology. So we saw an opportunity there with kind of implementing certain technologies to kind of bring kind of streamline the accountancy process for a lot of businesses. Now Toast has evolved over the last number of years. So what we started with, in terms of our own strategy, our own kind of plan for the next 5 to 10 years, that has evolved quite often, and probably it looks a lot different than what it was in the first 12 months. So we set out with kind of a plan to use the technology, but not really understanding how far that can take us. So we quickly realized that, you know, the technology is there for a reason. And it kind of lent us into down the path of that accountants are more than just the compliance people. So they're more than people that just file your accounts and do everything else that you expect them to at the year end. That's the bare minimum side to it. So we see ourselves more as advisors, with accountancy as kind of the it's what you should expect, but it's probably more on the advisory aspect. So the, the you know the 4 years in now, obviously the plan has changed, but that's how we see it, and that's
Yeah.
how we think the value that we can add to businesses is through the advisory aspect. Whilst you always have the compliance there in the background, but look, that's just a bit about us. And hopefully this, like a lot of this, will kind of cover reasons why we think our change as such is probably beneficial for our clients as well. Um, but in terms of what we'll cover for this webinar, we'll just explore the kind of the hidden cost of a passive accountant. So what is currently happening with a reactive accountant as such, if that is one that you're using, and 5 signs they're holding you back. But then we'll touch towards the end on what a good accountant really looks like. So what you should expect, and then potentially what you can do next then to try and shift your mindset.
Absolutely. The big
The first big
question.
question, yeah, first big question is, so what are you actually paying your accountant for? So if we asked a lot of our clients this, they would probably tell us the same thing, and it's probably just, oh, we pay him to do our accounts, we pay him to file everything, and that's it. But a lot of people don't really know that, you know, accountants are actually valuable advisors as well. So it's not
Mm.
just the compliance is like we said, it just touched on everything. It's the bare minimum you should be expecting. So they're valuable advisors. They offer tax planning opportunities. And ultimately their expertise is beyond knowledge, beyond the compliance side of it. Right? So if what you're getting at the minute is just compliance, then you are losing out. But if the question of what are you actually paying your accountant for, then a lot of people can kind of be like, the answers will differ, but it tends to be, they file my accounts
They keep
and
it. They
right,
keep HMRC
HMRC,
happy.
yeah, and that's kind of ultimately what it is. But like I said, we'll touch on kind of what the differences we believe are, but um, that's probably the big question everyone should be asking themselves right now, if you're probably losing out um, on certain
Yeah.
areas of your business.
And look, there's not a problem if that's what your business requires in terms of it's just right. We keep HMRC happy, we file our accounts, we keep everything standard, and that's all that your business requires. That's fine. There's no
Yeah,
there's no issue with that. Um, but this was probably to highlight kind of some of the things that an account, like Stephen says, can kind of support the business go on. um, how they can actually help you understand where the business is doing well and maybe where it's not doing well, and how you can actually achieve kind of the objectives and the goals that you want for your business. So it is a question as to what are you actually paying for. If it's just the compliance and that's all you want them to do and they're doing a good job at that, there's absolutely no problem with that. But it is if you want that support and that insight and that kind of the forecasting or seeing kind of where your business is going to evolve to, that's maybe where you need additional support. You maybe need a bit more from your accountant, let's say.
yeah.
Okay.
So we thought this would be beneficial because a lot of our look, we see ourselves as very proactive, right? And I thought we would just include this reactive side just so you can kind of see the differences with it, right? So in terms of a reactive accountant, what's the benefit of it? And what I mean by reactive is that, they're being led by you essentially, or they're being led by outside factors and trying to move the business forward. So if you're ringing them with an issue, they're very reactive, right? Ultimately, it should be all the way around. And a proactive accountant is kind of identifying the issue, picking up the phone to you and being like, look, here's the problem. Here's how we address it. We're You're kind of preventing a fire, not putting out a fire, right? That or what would
Yeah.
potentially be a fire, but
Yeah.
it's those things that is the big difference between reactive and proactive. But what you will find with a reactive accountant, yes, they will be probably more cost effective because they're doing their bread and butter. They're just doing the compliance work. They're doing the stuff that's easy to them, and the cost associated with that be minimal, right? And so, like we touched on here, very compliance focused. So the returns are filed, and great, that's fine. But that what you're missing out on here is in comparison to a proactive accountant is that opportunities are a big one, lack of insights on an ongoing basis, the data that you're relying on, which is a big one, because 9 times out of 10, what we found is that, you know, particularly with some of the clients that we've onboarded over the last number of years, a lot of the issue was like, my accounts are filed 9 months after my year end. I'm given information that is now historic. I can't really make
Yeah.
decisions off the back of it. And then you're kind of like, well, what's the use of this to me? It's literally just like, yeah, that's done, that's fine, let's move forward. And that kind of ties into the lack of insights as well. You want to get that on an ongoing basis for you to be able to make decisions on an ongoing basis. Um, and the data, like I said, you can't rely on it because it's historic, and it is just compliance over clarity. So it's
Yeah. I mean, if you think about how your business changes and how quickly it changes, getting financial information 9 months after you finished a year, is probably, like Stephen says, there's not much use to really. Like how are you supposed to make decisions on that? Historically, it might not have been as much of an issue, but the way the world works today and the way business works today, the quicker that you can get your information and the more kind of insight that you have, the better you can kind of navigate the ever-changing environment. Um, and that's really where we would kind of see what good looks like is where, before you actually finish out your year end, you should have an indication of what your corporation tax is either even trending towards or, what it potentially could end up with. Where, and like Stephen has said there, is that there's an opportunity to tax plan at that stage. If you're then getting it 9 months after and you say, well, I've got a huge tax bill I wasn't expecting, what can I do about it? And your reactive accountant sits there and says, well, actually nothing because your year end's finished, but we can do something next year. It's
yeah.
not really much comfort to you when you're having to pay your corporation tax bill that is much, much higher than what you thought it was going to be.
Yeah, and look, it's going to tie back into your here and now operations because if you're 9 months into the current year and you're getting a set of accounts and a liability that relates to a prior year, but you have a couple of weeks or a month to pay it, you've went 8 months or 9 months without no like working away at your reserves and your cash balances, and then to be hit with an additional amount to go, right, well, I wasn't really expecting that much quite soon, and then you're kind of then having to make further adjustments internally to try and fund that HMRC payment. So people underestimate the impact that it has of finding out so late in the day because if you had a plan for the current year that you're working towards or a strategy, but then this can potentially blow it up because you're having to reallocate some of the resources to pay HMRC. So it's It's probably something that it's probably one of the biggest things that we find for a
Yeah,
lot of clients making a switch or looking to make a switch is that this is something that has changed plans for them drastically.
yeah, yeah. So five signs accountants holding you back.
Yeah, kind of touched on it most of them anyway in that last slide is that, they'll only talk to you at a year end. So if you're one of the ones that your accountant is ringing you 4 or 5 months after the end, say, look, bring your information and we'll work on your accounts. And then they'll bring you on once later to go, oh, here they are, they're done. Here's my invoice and I'll see you next year. Right, that's that's kind of what they'll only talk to you at a year end thing. Yeah, is how that works. And you're the one doing the chasing. So like you're the one that's chasing up this information, going, look, I need this information. Because that does happen. A lot of people are doing things for a business and they're looking to expand. So they are trying to build it and they're looking to grow it. But no, if they're looking to finance for certain things, then banks and stuff like that are going to come and say, well, look, I need that information. I need certain information to be able to do this. I need your previous year accounts. I need a current year set of management accounts. And if you're constantly the one chasing that, 9 times out of 10, you're chasing it because the accountant hasn't got it up to date and they're not able to give it to you over in a quick turnaround. So that's kind of back to the technology side and like staying up to date, everything in real time that you should be able to do all those things. And number three, they report the past, not the future. Like we've said on the previous slide as well, is that, getting stuff 9 months after the fact, it's historic. You can't really do much with it. You may look at it and then a lot of people just set it aside and never look at it again.
Put it in a drawer somewhere.
The drawer somewhere, yeah. And four, they don't get your business, right? So, it we kind of pride ourselves on it at the initial stage of the meeting the client. It's trying to understand the person, but trying to understand the business. It's like, right, what is the business currently, right? What's its challenges? What is it facing? And then we try and implement a plan around that. But then it's kind of like, well, what's the plan? What's the 5 year plan? What's the 10 year plan? Like, where do you see this? And then we're all working towards the same common goal for the business, right? It's not just you're coming on, oh, this is my business. I need this, this, and this. Okay, we'll do that for you. Fine. And then that's it. There's no real kind of partnership between yourself and the account. So I think that's the big part of they don't get your business. And it probably more so they don't see the long-term plan.
Yeah. And that probably has more of an impact than is maybe visible at the outset, because as you go along, if your plan is to exit the business or your plan is to pass it to your children or whatever, that changes the advice and how you actually approach things. So depending on what your actual goal is, really your accountant should be like a partner, like Stephen said there, is actually understanding what it is you're aiming towards. And any of the advice that they're giving you along the way, it's all those small bits of advice that build up, to the end goal of whatever that is. And that's going to differ depending on, the person running the business, the structure, the industry, the whatever markets they have. So all that's going to factor into the advice that they're giving you. So if they don't understand it, the advice is going to be very, very generic and maybe not that suitable or not that impactful, in which case that affects the business, and it's not always evident because you think that everything's being done and it's fine, and yet they are doing the bare minimum and that's fine, but it's not really what it should be. And that's what we're trying to say is what does actually what would good look like, because a lot of people maybe don't know what it maybe could be or what it should be versus what they're currently getting. And that's what we're kind of we'll kind of come on to as we progress through.
Yeah, and then the last one on this is that they never challenge your thinking. So, like I said, they're there if it's there for they're in a compliance based role. Then they'll always tell you like, oh, that's grand, it's fine, everything's okay. And it's just like, okay, then oh, that's great. And then there's no real kind of back and forth to kind of
Yeah.
challenge your certain viewpoints on certain matters, but it's kind of like, oh yeah, that's fine. Yes, we'll do that for you. But again, it's probably not. It's you probably want someone to challenge it to be like, no, look, we think you should go down this direction instead of this direction because it can have a big impact on certain decisions you make within your business.
Yeah, and,
Um,
and running a business is difficult. And if your accountant isn't actually saying to you, giving you an honest opinion, if you come forward to you and I'm thinking of doing this, or, you know, um, what do you think of this business opportunity? If they're like, yeah, it's fine, like that sounds okay. Where if you're discussing with them, say on a quarterly basis, and you're discussing what's actually going on in the business, it is good for an accountant to kind of go, well, hold on, why are you doing it like that? Like, that doesn't make any sense. You could structure that a bit differently, and if you structured that a bit differently, this would be the better result. It doesn't mean that you have to actually take the advice, but as long as they're actually saying, okay, does that make sense? Are you sure this is right? Can you do it a different way? Or it's much more of a partnership, like
Yeah,
Stephen has said there before, and that they're helping you, they're being that support for you, they're being that financial sounding board that you actually need to run a business, because it can be very difficult when you're running a business to run all the various different aspects and be an expert at all the areas. So the more they challenge you on that as to why you're doing certain things or why you're making certain decisions, the more helpful that is as a business owner. There's no point in somebody sitting there saying, "Yeah, yeah, that's great. Oh, yeah, listen, that's fine. Just go ahead and do that." And then it turns out it's not the best idea in the world.
mm,
And that's no
yeah,
help to anybody.
yeah, exactly. Um, like I think and these next few slides, like that's 5 points that we touched on there, but these next few slides, they just kind of have a bit of they support basically what we're trying to say, just in terms of some stats and that we've seen and looked at. So if we look at the first one, they only talk to you at year end. Long periods of silence. You get reports after year end, and what we found, 34% of the small businesses have little communication with their accountant outside of tax season. So the 2 points in the E, you'll see your accountant when your personal tax bill is ready, and when your company tax bill is ready and prepared. So communication is massive that we find between ourselves and our clients, and obviously the advances and everything that you have in the technology. There's vast number of methods that you should be using now. That silence shouldn't really be. You have people are using like obviously WhatsApp messages, Zoom calls. Like it's not because everything is advanced so much. It's gone past the point of having to see that accountant face to face to be like, right, that maybe you don't see them that often because you're having to arrange things about for a meeting in their office. But no, communication now is key because there's numerous methods that you can stay in touch with them. And
Yeah.
you should be able to get that response as soon as possible as well when you reach out to them.
Yeah, having to book an appointment in park and do whatever you have to do, and it taking an hour to get an answer to a 30-second question, really, in this day and age, probably isn't something that you should be doing as a business owner. Okay, so late reports.
Yeah, late reports, unanswered emails, confusion. So you're the one that's always chasing them. And if let's say 66% say the current workload gets in the way of serving their clients' needs, right? Um, which is a big problem. So there could be a few factors because of that, is that they're not using certain things to make sure that the workloads they're staying on top of it. They're not utilizing software, they're not utilizing technology. And then they're always playing catch up. You'll always be in a position where they are reacting to everything that you're asking them to do, and everything is delivered on time, on deadlines, on which it's a massive impact on the business if you're constantly
Yeah,
chasing them for everything.
yeah, and that, like, to be fair, when we were researching this to actually do it, 2/3 saying that's what's holding them back. Like, that is a huge percentage of accountants across the UK that obviously can't provide the service that, and it's not out of the fact that they don't want to, they physically can't because of the workloads. And that, from a business owner's perspective, that's the person who ultimately suffers is the business owner. And that's really where I was surprised that it was as high as that. Um,
Hmm.
so that's the
Yeah.
late report.
And the next one is this is probably the one that I find most, I wouldn't say surprising, but it's probably the one that I think that should be. This is where the big issue is, like with kind of what accountants are currently getting versus what they should expect. So you're getting reports that are no forecast and are planning on them. So they are basically working off historic information. And they're being focused probably too on your day-to-day transactional stuff than actually sitting down with you in a meeting on a regular basis to discuss strategy, to discuss certain things of how the business moves forwards, to identify inefficiencies, to be like, look, if this doesn't change, this is what's going to happen. If this does change, this is what can happen. So you're you're no real plan for the future with them. It is this kind of here's figures that well, a lot of people just be like, yeah, that's great, but what do they mean? It's that you want to understand it a bit more, and then you're just kind of you're moving forward with no real plan,
Yeah.
um, than actually being
Yeah.
advised on how to move forward or building on a strategy to help you move forward.
And a lot of clients that we speak to, they kind of feel like that they should be more versed in financials and things like that. But that really isn't the case. It should be your accountant, like Stephen was saying there, should actually be saying to you, look, um, this is how you read this and this is how you interpret them. And so in comparison to last year, it's up or it's down or it's trending this way or that way. So they should be actually the ones that are actually kind of identifying the patterns or the areas of concern, or what, as like we're saying, what's actually working well or what's maybe not working so well. So it is literally just, if it's compliance only and it's numbers that are 9 months old, yes, it keeps HMRC happy, and yes, it keeps your company requirements up to date. But literally, it is not giving you any insight into how you actually grow your business. What opportunities you have, can you pursue them? What are sales doing at the moment? Is there anything coming for your industry? Are there any changes? Is your gross margin eroding, so you're not making as much money per pound that you sold? So all those certain things that your accountant should be kind of highlighting to you, so that you can actually do something about it. Where if you're unaware of the problem, you know you'll not even see it coming. Where they should
Yeah.
kind of be highlighting those to you in advance, so that you have time before it's too late to actually fix them. And if you knew about it, you probably would fix it. So yeah, and again, it was surprising that it is so high that 72% are stuck within the manual transactions and not going towards that kind of insight stage and the advisory stage. So
Yeah.
nah, that one's global, isn't it?
Yeah. And then they don't get your business. So, like we touched on earlier, is that they don't, they don't know what the long-term plan is. They don't understand the ins and outs of the business, certain areas of the business, how each area of the business is actually working. So what they can, what they're probably a lot of them are doing, you can't do is they're giving you advice based on industry, a vast number of industries that they're trying to compile into one type of device that kind of a one fits all, but it doesn't, because every business is different, every industry is different, so they need to understand that industry specifically, and then be able to advise off the back of it. Because if you're getting a one fits all, what they believe kind of type of advice, then it's very risky. You can end up down a path that um it doesn't need to be. It can be
Yeah.
disastrous. It can be great, but
Mhm.
it's having that one fits all type of advice is probably it's not really lending itself to future success of the business.
Yeah. And
Um,
just in a really simple example, if they're not aware of, say, what your personal circumstances are, or maybe if it's yourself and your wife that are running the business, or whatever, and if you have other financial interests outside of it, and you ask them a question like, well, how much salary, how much dividend should I be taking? And they just give you a generic answer of, yeah, you should be taking this tax free, and then this dividends, and that's the most tax efficient way for you to do that. But if you have other sources of income and you have, other financial setups in your personal life, that could completely uh, be incorrect advice. So if they don't understand how the shareholding is, or how the shareholding structure is, what the company setup is, what your own personal circumstances are, it is impossible for them to actually structure something possible, or in the most tax efficient way. And so it can end up costing you tax, and you're wondering why your tax bill's kind of higher than what you're expecting, or higher than maybe other people. And it can be something as simple as they didn't take the time to understand what your other sources of income were. If you have rental properties, if you have, other companies elsewhere, if you're drawing other salaries, or if you've, investment income, that completely changes how that should be done. Um, so yeah, and that you won't even notice that you're paying that is the problem.
yeah.
So
And
uh,
then the next one, yeah. So they never challenge your thinking. So like what I said earlier, they tell you that, yeah, that's fine. Go ahead and do that. That's great. And there's no pushback from them, but there's no strategy to it. So I mean, the bottom line is you don't grow by playing it safe, is what we've touched on here. In that, yes, you'll have to take certain risks at certain points throughout the business. But doing it that aligns with the strategy and the overall long-term goal of the business, then it's probably worth that risk. Now, being willing to make those changes and take that risk, then you're going to need some kind of advice and support off the back of it to kind of be like, look, and maybe some contingency plans if it doesn't work to be able to like, well, look, if it doesn't work, then we can go to this direction. It's not just having one simple bit of advice and then kind of moving with it. It is just trying to have that bit of pushback, have certain other kind of contingency plans in place if that doesn't work. And again, another stat that we're touching on is that a lot of it seems to be in relation to their existing workloads that they can't really find the time to do this. But you know, uh, technology and everything else these days, it's that time load and workload, it should be minimal in terms of the transactional level, that they should be focusing on ultimately what, I mean, even myself, I've done the qualification for, you're in this role and this to be an advisor as such to a business. It's not just kind of the filing the HMRC things, because I can tell you throughout the exam process, it never tells you how to file a thing to HMRC. It tells you how to advise a client on certain aspects of the business.
Yeah. And
But yeah,
that's a good point, is that the skill set is there, and that, I'm sure the vast majority wish that they could do this a bit more, but it's just that their workload is preventing them from doing that because of the way they're set up, because that maybe the technology is not, they're not using technology to the way it probably should be used. But they do have the skills to do it, and that's probably the most frustrating part from our side, is that, we've gone through the same training, we know what skills that they have. And again, like, it is, you know, there are always risks in business, and you can't avoid that, but you can minimize it. So, if you're making a very serious decision to invest in a new premises or a new venture or going into a new market or whatever it is, you probably want to minimize that risk as much as you possibly can. So if you have forecasts and cash flows, and to make sure that all that's going to be as safe as you possibly can. So it then means that you have that buffer to actually, survive some of the unexpected events that you're inevitably going to come up against, because that's the nature of business. But you shouldn't have the unexpected events and the unforeseen ones that maybe your accountant could have seen with a cash flow forecast or a projection that they could have assisted you with. You get both of those together, it really reduces the chance of your risk being a success. Um,
yeah.
so that's really again where the support comes in. So the next one.
Yeah, so now suppose after kind of what you've been probably missing out on to like what the right accountant should do, right? Now here's just a kind of 5 bullet points, summarizing it as such. But the first one is to help you understand your numbers, right? And what we mean by understand, it's not just explaining this means this and this means. It's more just really getting into the detail of, here's your numbers, right? But where does this number sit in comparison to someone else in your industry? Where does it sit in comparison to some of your competitors? And then trying to narrow and bridge that gap if there is a big gap, how to tackle it, and then how to move forward with it, which does kind of give itself a proactive insight to it. So you kind of looking ahead at being like, look, if you make this change now, in the next quarter, this number and this figure will change. So if you cut this cost here, then your gross margin and stuff like that will improve. So it's those kind of proactive insights that you need to be looking for, helping you plan for the future. Yeah. So what is that future? Is that future is it a future sale of the business? Right. So how can we set this up so that the business is in a prime position to get the most value for it, so you can get the most value out of it. And then spot the risks early would be another one. So if you're regularly getting information from your accountant, you're regularly meeting them, which we find now a lot of businesses, particularly the ones that are growing fast and have a plan in place, and they know what that plan is, then you're in a position then to kind of implement that plan alongside them and be able to spot risks early. So if you're meeting them, you should be meeting them on a quarterly basis at least, to kind of see where that plan's going, see where the strategy's going, but then be able to identify risks, because there is changes, obviously external factors, internal factors of the business that your accountant needs to be on top of. So what externally, is there any you know issues with the market? Is there anything changing? But then internally, right? So are you losing any staff, or if any big changes happen internally, right? Well, how can we maneuver around that and move forward and stick to the plan. Um, and then lastly, just to be commercially sharp. That's kind of the main ones to it. But you know, the other ones that we haven't touched on is probably the tax planning side of things, which is a big thing for every business owner. Is that the right accountant should be in a position to save you on tax in a
Yeah,
way that is completely above, compliant with HMRC. There's ways and means to do it, but are you getting all of those presented to you in a way that you can save on tax whilst planning for your future? Pensions, stuff like that. Are you getting regular advice around that? Um, but that's the big one. Tax probably the biggest one I find for it. And then a few other ones like we've touched on before is you need them to be accessible. You want to be able to
yeah,
contact them with any question that you have as you move forward. And ultimately being educated and informed by your accountant. That's probably what you as a business owner want and should be the least that you should expect from them.
yeah, yeah. And it is like it all builds together. So it's all the small bits. So it's the likes of regular communication, regular insight. How they actually set things up, and how often they kind of sit down with you to understand what's actually changing within the business and how they can go forward. Now the ultimate goal may remain the same at all times. So if it's an exit or whatever it is, but just so that they're kind of keeping up to date with how your business is changing and what you kind of need to adjust as you go along. Like Stephen was saying, if you're not aware that your cost of materials have gone up substantially, you're maybe kind of somewhat aware of it, but you're maybe not aware of just how badly it's increased. There's very little that you can do about it. So it might be that you need to change supplier, it might be that you need to find different markets and things like that. But if you find that out too late, it might be too late to save the business, and that it's things like that will help a business owner navigate through. I mean, especially in this day and age where things are changing so quickly.
Yeah. And just a slide on kind of how we approach things, right, in terms of how we deliver for our clients and how we see it working with them. So regular check-ins is a big thing, but that kind of comes after the fact of meeting them, understanding the business, looking at a plan, seeing what it looks like, and then implementing that plan over a period of time. Yes, you'll always have the compliance in the background. Look, if you take anything away from this today, then I think you should take away that the compliance is the bare minimum you should be expecting from your accountant. That is just a given. That is what's expected. You need to go a bit over and above that. So with regular check-ins, yes, consistently meeting them every quarter, whether that be prepping them for an upcoming board meeting that they're maybe attending, so that they have the financial information there in front of them to be able to report to the board or to be able to report to their stakeholders, wherever that may be. But having that regular check-in, keeping them informed, um, and keeping them informed via kind of reports that actually mean something. It's not just a report that has numbers on it. It's a report that one is probably visually a lot better, easy for you to
Yeah,
understand, just from a minimum. It's kind of it helps you understand it a bit better. Um, and then forecasting, for the future is like, right, what does this look like? What is our plan? And what will it look like in 12 months? So having that regularly with the clients, whether it be at the beginning, like I said, right, let's do a 3-year forecast, and then we regularly report against that to see how we're trending, what we can change to keep it back on track if we dip below it. But then having that kind of commercial and kind of human insight, so understanding obviously market trends, what people need, and building that into the overall kind of regular check-ins and the proactive side of it. So recommending, being proactive with a recommendation. So if it is that tax planning strategy to be like, look, if you do this now, this will save you X amount in tax, or if you do this now, then you'll save X amount on a certain cost moving forward. And then kind of having that kind of bouncing off of them to explore certain avenues that you can do to reduce tax and make other changes to your business. But ultimately, we see ourselves as a partner for the growth of the business. So taking the business through every step of the way, kind of from start, from startup phase to implementing a certain kind of package that streamlines your business internally. Because a lot of this, people are doing a lot of this internally in terms of the transactions, and there's a cost to that. You might have a member of staff in there
yeah,
that's doing a lot of this stuff that maybe they're better suited to another area of the business. Maybe they're amazing at sales, but they can't really get to that because they're stuck doing some transactional stuff or admin work that ultimately you could actually streamline and get something in place or a software in place to do that. And that's what as accountants they should be able to do. Identify that as an inefficiency, free up someone else's time so that they're focused on driving the sales. And then what you'll have there, obviously turnover increases, but the admin stuff is kind of taken care of by software or something else that you've implemented. So those small things that we believe we can implement and a kind of partner for growth, all kind of combines into one ultimate solution was about what is are we working towards a common goal and what is the end? What's the ultimate
Yeah.
success part?
And normally that takes a couple of different forms, which is there's kind of small things that you do day one, and there's then the ongoing stuff as we go along, and then there's the ultimate kind of goal. But it should be an evolutionary process where you kind of take it in small steps and you improve and improve and improve, to gradually build, and all those small improvements kind of make a big impact when you add them all together. And that's really what it's about, is like I said, it's a partnership. It's somebody there constantly trying to look out for your business and actually looking, seeing where you can actually improve on it, and areas to minimize in tax, or improve margins, or grow sales, or reduce admin and all that, save time for you. So it's all those things in combination that you really should be expecting.
Yeah. And just the last few slides that we're going to work through. So we'll just finish with a bit of a kind of a case study of one of the clients that we work with for this, because this is one that we found that they find a lot of benefit in it, in terms of what we actually done to begin with. So, obviously you met with them, you established what was wrong, what was going, what was their issue, what was their main issue that they're currently facing. Now this was a well-established business in the area, but they wanted to explore certain things and they wanted to get that real-time information. So they wanted to see how the business was trending. They wanted to communicate this to the staff members to be like, right, this is our target. This is how we achieve that target. But the big thing with this business, what it was, it can be very seasonal, like any industry, but it's trying to combat certain points in the year to kind of address that seasonality. So if there's a period of time when there's a lull or it's a quiet period from a revenue standpoint, right, well, the biggest cost then maybe kind of staff wise and stuff like that. So what are you doing there to kind of combat the dip in revenue? So having that information in real time has been able to make some adjustments and make some changes as they go out through the year. But ultimately, they wanted to reduce time spent on compliance, which implementing software was the big thing for them there, and they needed that faster insights to make better decisions. So meeting them on a quarterly basis to be like, here's how things are trending. Here's where you sit this year versus where you sit that last year. So those kind of small things, but then it's like, right, here's where you sit now versus where the goal is to sit next quarter, where the goal is to sit this time next year. And having that information to hand has allowed them to make better informed decisions and increase the revenue, which was their main goal to begin with. Yeah, and what I've touched on there, so yeah, implementing the cloud solutions to automate all the kind of the admin stuff to begin with. So when the invoices coming in, sales, and then tracking it all through the software, but then getting the ongoing reports in every quarter, which and is now kind of monthly as well, because it's there's more value in that kind of getting the regular update on things on the real time information. So all those combined throughout the year just allows them to make better decisions and kind of move forward with the business.
Okay. Hopefully you find that useful, and thank you for joining us today. Now, we have put together a guide just kind of summarizing the main points that we've covered there. We will send out a copy of the slides as well to everybody who attended. So hopefully you can find that useful. And obviously, if there's anybody who would like to discuss a bit more in detail about what they could potentially benefit from, or how we would actually change, like we do offer free consultations to just look into the business, and even if it's just a sense check in terms of what they actually need, and what you should expect. Like, we have no problem doing that. So you can get in contact by scheduling a consultation or a website. But again, look, guys, we had a schedule for an hour, but we've managed to get through it in 40 minutes. So hopefully you get some of your day back from them. And listen, thank you for attending, and we'll send the guide out as well.
Right. Thanks,
Thank
everyone.
you, folks. Cheers.